This how I try my trade and it helps me to stay sharp. This week I've not made any money. I made $0. I'm waiting for price to get to my level, and I have to wait because patience is very important. I've been sleeping since morning, so let me show you my chart. Let me show you my setup, right? Okay, first thing is this my trading plan. This my trading plan. This is the 11 rules I follow before I enter the market, right? Before I open my chart, I read through this, or if I see a setup, I read through this to make sure that it matches. If it didn't match, I'll skip it, right? I backtested this method and it worked. So that's why I put it together here. This is my trading plan. Trading plan is not supposed to be turn $100 to $50. No, no, no. That's not how trading plan is. Trading plan is will tell you where to enter, when to enter, and how to exit, right? Then you can have your risk management through. So this my risk, you can see my risk management through, all right? So before I enter, before I start using it, I back tested it before I make the rules to me, right? And it have been working. That's how I got my entry setup, right? Let me go to the chat and show you guys how I do it. Now, the first rule say that we should identify the market trend, right? Now, I can see that the Bitcoin price have been going down. I see that from here, the Bitcoin price have been going down, right? Which means that the Bitcoin is in a downtrend. Bitcoin price have been going down. It means that the Bitcoin price is in a downtrend. Then, first thing I look for is my area of interest. You look for area of interest. Then this first area of interest, I look for it, but the price is not bounce there. Right, this first area now, I look for it, the price did not bounce there. Then I put a level here as well. This was a supply zone, right? This was a supply zone. So the price did not touch on the supply zone. Then I look for my breaker block, which is here, which is a failed order block, right? So let me get it. This is a breaker block here, a failed order block. So I put my entry there, then price hit on the breaker block, right? Then I went down to my lower time frame. Can be on 1 hour or 45 minutes. I went down to my lower time frame. Now, if you observe, before the market, before the market reached that limit, reached that area, it was doing something like this. It was dropping levels on the market, right? It was dropping price levels. It was dropping price level before you get to that zone and start coming down, right? So as the price was doing something like this, it was doing it on lower time frame. If you go to 15 minutes, you see a lower one, all right? Then what I look for is for price to reach that zone, then break a structure. This is a structure here, this is a low here, all right? This is also a low. So what the price is price break below this low. Price break below this low, right? Went up, create an inducement, then came down, all right? Create an inducement, then came down. So the first pullback after break of structure is known as an inducement. Let me show you. This is a price model I look for, right? This shows me that the sellers are here, right? Price went up, reach your area of interest, come down, break below the last low, which is break of structure, all right? Then create an inducement, pull back. The first pullback after price break is known as an inducement. So price came down, right? What do you do the next one? You look for your entry. You look for your entry at order block, which is the last candle before the up move. So you look for your entry here, which is the other block, right? That's how I got this entry here. That's exactly how I got this entry here. Let me delete this. Let me shift this a little bit. This is basically a prototype. So I find this across the pairs. And trust me, each of these pairs, I don't risk more than 2% on my account in each trade. Now, if I'm trading Profirm, I'll risk only, like there's a Profirm account I'm trading, and I'm risking only 0.8% to 1%. So now, another thing that's killing a lot of traders is impatience and over-leveraging. If you want to flip your account, there are strategies to manage your money to flip accounts, like using 10% per trade to 20% per trade, not putting all your money in one trade or one position, right? And people that are telling you that you should start trading with $20, those people are deceiving you. You cannot make a lot of money with $20, right? You might not make money sell with $20 because how much are you willing to how much are you willing to risk? 2% of $20 is 2 cents, and 10% of $20 is about $2 or so. You're not likely to be sustainable, right? Budget at least $100 to $150. So that way you'll be consistent and profitable, right? That's basically how trading works. So guys, follow for more trading, please share the video to your friends and subscribe to my YouTube channel so that I'll deliver more content like this and also give you guys a smooth delivery, right? Peace and love.